Hi, everyone. This is Josh Robinson with Checkmate. Thank you for joining our webinar this afternoon. I'm going to get started here in just a moment. Just going to wait 1 minute to let folks get logged in here. Okay, so it looks like we have a bunch of people online, so we can get started. So I am going to, I've got a presentation to go through here this morning, or this afternoon rather. We've got 90 minutes set aside for this webinar. The bulk of what I need to get through is going to take less than an hour. So I'm looking forward to spending a fair bit of time handling some Q&A at the end. There's a couple of pieces to what I'm going to cover this morning or this afternoon. One is the main gist of a presentation I've now given a handful of times on calculating your loan forgiveness. There's a spreadsheet that everybody who's on the webinar today is going to get a copy of that we're going to be going through to explain how forgiveness works. And then I'm also going to put a little bit of a new into this presentation by showing you a couple of the tools that I've been working on that I'm now placing into everybody's accounts as part of the PPP Loan Support Service. It has taken me a little bit longer than I was expecting to get this all ready, but it's now, I've pushed FT account reports into everyone's accounts that signed up for the PPP Loan Support Service, and I'm now working on the finishing touches for the forgivable payroll cost reports, which will be out there sometime this afternoon. So I'm going to show you those as well, so that you're ready to make use of those. As soon as they're available for those for the couple of reports that won't be there until this afternoon. And with all that said, the end goal, the whole point of all of this is to put you in a position where you can start to make strategic decisions now on what to do with the remaining PPP loan money that you have in your bank account as we're coming up towards the end of your 8-week loan period. And additionally, I want to, while I'm at it, I want to take the opportunity to alleviate some concerns that folks have about the whole FTE headcount threshold and the wage reduction threshold concepts. So that's the gist of what we're in for here. And so I'm going to share my screen now, and now everyone should be able to see my screen. And I'm going to start with this little presentation and then dive right into the spreadsheet. And then from the spreadsheet, as I said before, I will then go in to show you some of the tools that I've put in place within the Checkmate HCM system for those customers that are using the PPP Loan Support Service. So before I spend any amount of time in the particulars, I find on all of these presentations, it makes sense for us to talk about what's happened, and thus far, and what's to come, especially now that round 2 of the PPP loan program launched on Monday, and my mind is kind of blown that it's not shut down again yet, but any day now, they'll have tapped out the rest of the cash in PPP round 2. The gist of the round two funding, there were not any fundamental changes made to anything to do with how forgiveness is going to work. All of the questions that have been out there now for the past couple of weeks in regard to how forgiveness is going to work remain open questions. I am still waiting to see additional guidance come out from the Treasury, SBA, and whatnot about how this is all going to work. But basically what I'm going to do is, as I go through this presentation, I'm going to explain to you as I walk you through how to forecast forgiveness and how to actually track forgiveness in real time. I'm going to explain to you the things that, the elements of this that I know, facts and answers to, and the elements of this that I don't know the facts and answers to because there hasn't been guidance provided. And I'm going to offer some strategies, that you can consider in light of the aspects of this that remain uncertain to put yourself in a best scenario for maximizing forgiveness. And I do apologize that there's going to be a fair bit of complicated math and other details in the presentation, but I do think that I've done a fairly good job at breaking it down to as simple of a concept as I can. And again, anybody who's on this webinar, anybody who gets the spreadsheet from being on this webinar, which you will get in an email, which I'll try to send this afternoon. At any point along the way, if you need some of my time, to help you directly one-on-one, I'm happy to answer questions. I'm happy to, schedule some time to get on a phone call and talk through your situation if that is something that you'd like. So please keep that in mind. I'm not just, throwing this all at you and saying, here, figure it out and be successful on your own. This is complicated stuff, and everybody has unique circumstances that needs consideration. This was quickly enacted legislation that was not thoroughly thought through. There's all sorts of elements that did not get the kind of attention that they should. And in some cases that puts you in a tight spot because, for instance, right now there has been no word about any extension beyond June 30th of the deadline to spend your PPP loan money. And if you're hospitality or if you're in any of the industries that are in a forced shutdown right now, and you might not even be able to open up until mid-May or later, perhaps. Well, you're not even going to have 8 weeks between when you open back up and when you June 30th. But on that note, I want to go to some fundamentals on the PPP loan program, because on that note, whether or not you have 8 weeks from the point that you open to June 30th doesn't really matter. So I want to explain why I say that. It doesn't really matter whether or not you have 8 weeks to spend your PPP loan money from the point that you open up again, because the PPP program only cares about when that loan was dispersed. And so the first concept that needs to be considered when it comes to PPP loan forgiveness is the 56-day period, the 7-week period or 8-week period that you have to spend that money. So you've now had your loan approved, you now have X dollars to spend. And from the date of disbursement, which is the day on which that money is in your bank account, you have 56 days to spend it. So question number one about how much of our loan we can get forgiven is answered by how much of it did we spend within the 56 days. Once we have determined how much of that loan money we spent within the 56 days, we then can determine whether or not we can have all of it forgiven. And so as the slides in this presentation are covering some of the basics of the PPP program, so I'm going to zip through these so we can get to the part on what we can spend our money on. Okay, here we go. Okay, so as I said, question number one when determining our PPP loan forgiveness is how much of that money can we expect to or did we spend in the 56 days starting on the date of disbursement. Whatever amount of that money is spent in those 56 days could be forgiven. And the whether or not that money will be forgiven is going to be a function of three things. One, was it spent on legitimate costs? Two, was any forgiveness sacrificed because of the costs that we spent the money on? And three, was any forgiveness sacrificed because of discrepancies between our FTE headcount or discrepancies between our earnings? So when it comes to determining what to spend your money on, this is the list of legitimate costs that you can spend your PPP loan money on. The breakdown of this spend has to be no more than 25% spent on non-payroll costs. So you can spend up to 25% of your total PPP principal amount on payments of interest on mortgage obligations, rent, utilities, interest on any other debt obligations. Those can all be paid for with up to 25% of your PPP loan money, but not more than 25% of your PPP loan money. As long as 75% of your PPP loan money is spent on the payroll costs, which in this case include your payroll costs, your gross payroll costs, plus your employer costs for health insurance, plus the employer cost. It doesn't say it here exactly, but the employer cost on retirement. That is what 75% of the money must be spent on, and that has to be spent in 56 days following disbursement of your loan. And then you have your forgiveness concepts where you could sacrifice forgiveness if you have a wage reduction, and you could sacrifice forgiveness if you have an FTE count discrepancy. So we'll get more into the sacrificing forgiveness concepts of how those are exactly calculated. But for right now, what I'm going to do is I'm going to dive forward to our loan forgiveness spreadsheet. Okay, so the loan forgiveness spreadsheet has a couple of pieces to it, but the main tab, the calculation of forgiveness tab, this is where all of the totals ultimately that you're looking for are going to generate. The way the spreadsheet is designed is that all of the fields that require input from you are shaded in orange. So if you see an orange field, you know that requires input, and you know that the number in that, if you didn't enter that number in the spreadsheet, then that was there from when I put it in the spreadsheet. So in order to make it your own, all of the fields that have orange shading, you need to plug in your own numbers into. And so the best way for me to explain this, as I said before, you have 56 days after disbursement to spend your money. So your principal amount in this case, the example is $192,300 in principal amount. And so then the next piece of the spreadsheet is speaking to, well, how much of this did we use or are we forecasting to use during the 8-week loan period for payroll costs? And that's captured ultimately under the estimated payroll info tab, and that populates in this cell, B4. Then we have here a calculation of the amount of the PPP loan money that we're going to use to spend on everything other than payroll costs. So this is the summation of the utilities and interest expenses, et cetera. And so basically, using this spreadsheet on your estimated payroll info tab, you speculate out what is your actual gross payroll cost going to be for each week, including how much of that gross payroll cost might not be forgivable, because in this case it represents pay to an individual over $100,000 a year. And the system then, will return over here the summation of those two numbers, and it will ultimately calculate how much right now, based on our forecasting, does it look like we're going to have left over at the end of our 56 days that has not yet been spent. And this number now represents the amount of our loan that we are potentially not going to have forgiven, simply and purely because we didn't spend the money in time. Now, down below, the spreadsheet will calculate the amount that won't be forgiven because of your headcount issue or because of your wage reduction. But this pure and simple up here at the top is calculating how much of that loan money is just going to be left over because you didn't spend it. And knowing this helps put us in a position where we could start making some strategic decisions today on how we can, perhaps do something better with this money than have it turn into a loan on us. If I'm actually sitting and, looking at all of my numbers and I'm seeing that here I am in week 3 of my loan period, I've got 5 weeks left. I'm still lined up to have $50,000+ unforgiven because I'm not going to spend it in time. Well, I can now think creatively. I could apply some creative strategies to get the biggest bang for my buck. For instance, you could consider giving everybody a bonus, or certain people a bonus. If rather than having this money turn into a loan that you have to pay back, heck, isn't it a worthwhile consideration to perhaps take $50,000 and give it to employees in the form of bonuses rather than have it evolve into a loan that you have to pay back? Seems kind of like a reasonable decision to make here. But the idea here is you should start right now strategizing about what you're going to do with any excess PPP loan money, because you have less than 56 days to do this if you are already within your post-disbursement period, which many of you are. So in my case, when we looked at these numbers, it got us to think creatively a little bit about what we could do to maximize loan forgiveness. One of the things that came up in a conversation with a client the other day was in regard to employees that they have who earn more than an annualized amount over $100,000. And we got to talking, and technically speaking, you could even use some creative thinking to provide those people with a benefit with your PPP loan money, because there's no rules about the PPP loan money that says that you can't fund their retirement account. There's no rules about the PPP loan money that says you can't fund an HSA account for those that already make over $100,000 in annualized gross pay. But you can't use your PPP loan money to actually increase their gross pay. You would only be able to use the PPP loan money to fund their retirement accounts or to provide some compensation towards the health insurance costs through an HSA contribution or something of that nature. But in any case, the idea here with the spreadsheet is to help you forecast, to see how much you might be lined up to still have, so that you can make executive decisions over the next couple of weeks on how you're going to best spend that money to maximize your forgiveness. So once we've determined how much we're planning to spend, we now can determine whether or not of the legitimate PPP loan money that we spent during our 8 weeks, have we sacrificed any forgiveness of that due to our FTE situation or our wage reduction situation. And so on the subsequent tabs of this spreadsheet, we have our FTEs tab. Okay, so this tab is actually something I've now put reports in place for everybody to show you to automatically calculate your FTE counts for each of the spans of time that you're going to need to consider for your forgiveness calculation. But the gist of it is that the CARES Act allows you to pick one of two spans of time to determine the FTE count that you've had in your company that we're going to compare against as of June 30th to determine whether or not you have reduced your workforce in such a way that you're going to sacrifice forgiveness. So the CARES Act gives you two spans of time to use to calculate your FTEs. Spans of time are 1/1/2020 to 2/29/2020 or 2/15/2019 to 6/30/2019. Now, this is one of the places where I still have questions that have not been answered about how to do this assessment. The way that the CARES Act is written is basically the concept of a full-time equivalent employee uses the same concept as is defined in the Affordable Care Act, meaning that a full-time equivalent employee is any employee that works 30 or more hours per week. So the questions that I have right now are, that I'm still in need of getting answers on, is that, if it's true that a full-time equivalent employee is any employee that averages more than 30 or more hours per week, then for the way that you calculate your FTE count is you take whatever span of time you're using and you calculate how many hours were there in each of these spans of time that one would have to hit to equal an FTE. And again, that calculation is based on 30 hours per week. So between 1/1/2020 and 2/29/2020, there was 257.14 hours that one would have had to work in order to be considered a full-time equivalent. For 2/15/19 to 6/30/19, that number is 578.57 hours to be one full-time equivalent. So in essence, what you do is you add up all of your worked hours over each span of time, divided by 30 to come up with your FTE count. However, one of the things that I want to offer just a little guidance on here is that if you have salaried people or if you have hourly people who work more than 30 hours a week on average, it doesn't seem to make sense that for such people, we would actually count the hours worked over 30 in a week, because it doesn't seem to make sense that any one person could ever represent more than one full-time equivalent employee. But if we were counting 40 hours in our analysis here for folks that worked 40 hours a week, they would be coming out to 1.33 FTEs. So right now, the way I have done my math, the way that I have created the reports that are now in all of our customers' accounts who have signed up for the PPP Loan Support Service for your FTE calculations, is I have it based on maxing out at 30 hours per week. So if they're salaried, it sums up at a rate of 30 hours per week. If they have an average greater than 30 hours per week, it uses 30 hours per week for the calculation. So ultimately, you can use this spreadsheet to calculate what your FTE count is in each of those two spans of time, or better yet, you can go look at your reports that we've now put into your Checkmate HCM system, and you can simply come in and you could plug in your number of hours, for all companies. For all employees here. And then it will calculate again automatically your FTE count. Or alternatively, you can actually just take the FTE count off the reports that we put into your accounts in Checkmate HCM and plug the numbers into the FTEs for the period here. Based on which of these two numbers on this spreadsheet is smaller will determine which number is used on your calculation of forgiveness proportion, because the idea here is whichever date range you choose, you want the number to be the smallest one, because this is the number of FTEs that we are going to compare your headcount against as of 6/30. So in order to get full forgiveness, as of 6/30, you're going to need to prove that you have the same full-time equivalent number of employees as of 6/30 as you did on average during either one of these two timeframes. And as long as you can demonstrate that, yes, in fact, we do have a headcount that is equivalent or greater than what it was during one of these two timeframes, then you will not sacrifice any forgiveness simply and purely because of an FTE discrepancy. If you do sacrifice forgiveness because of an FTE discrepancy, the forgiveness will be rather small. So, for instance, over here on the calculation of forgiveness section, basically, if there was a number here, 18 or 21, if both of these numbers were higher than this number over here, then I would never have, or rather this number here, sorry, I would never have a fully forgiven amount. So if either of these two, if both of these two numbers are higher than your FTE count at the end of your 8-week loan period, then you will not get 100% of it forgiven, and it will be proportional. So for instance, if you previously had 21 employees and now you have 19, then you will have 19 out of 21 of the loan, of the forgivable loan amount will still be forgiven. So that would mean that 90.47% of my 141,835 would get forgiven, even if I had 2 FTEs fewer at the end of my period. That said, with both the reduction in headcount and the reduction in wages concepts, these things do not need to be settled on the 56th day after disbursement. So as I said at the beginning, you have 56 days to spend your money, and whatever is spent in 56 days could potentially be forgiven. Now, at the end of the 56 days, you may still have an FTE discrepancy and you may still have a wage reduction problem. But in both of those two cases, you will have until June 30th to fix that problem, and you can conceivably still have 100% of everything forgiven. Now, right now, I do not know what form the banks are going to require you to, make such an assurance in. I do not know what they're going to need for you to provide to prove that everybody's been brought back up to their prior wage level, or that your FTE count is where it's at. But the way things are worded, theoretically speaking, you could be 20 fewer FTEs at the end of your 56 days, and on June 30th, hire 20 people and have all of your loan forgiven, conceivably. That there is nothing about the rules that indicates in any way, shape, or form that that's an unreasonable thing to expect, which is why this spreadsheet is designed here at the bottom for you to plug in numbers associated with restoration of headcount and restoration of wages. And by plugging in these what-ifs, the system will further calculate the amount of your loan forgiven. It will determine whether or not there is, like in row 19 here, an amount not forgivable. If I had indicated here wages restored as yes, by simply having right here having all of the formulas in the spreadsheet, because these are all formula driven. But if I had the information in the spreadsheet such that the wages restored equaled yes, then this negative $230.77 wouldn't actually be impacting the amount of loan forgiven here on the spreadsheet. So the wage reduction in headcount, again, is simply using the FTEs tab and everybody now has a report in their account as long as you've submitted the PPP Loan Support Service form. You have a report in the system now for each of these 2 spans of time to show you what your actual FTE count is for each of these 2 spans of time. So you can take those reports, plug your numbers into these fields, even though they're not orange, and then that will flow back to your calculation of forgiveness for your reduction in headcount. The reduction in wages piece is slightly more complicated, and that is captured here in the reduction in wages worksheet. So basically, the way the reduction in wages part of forgiveness works, and I'm still, over the weekend, I'm going to work on seeing if I can't figure out a way to put something like this in Kronos. But basically, the way this works is that for every person that's, and I still don't, I have a lot of questions on this one, but there's going to be a comparison, employee by employee comparison, of the wages that they earned during your 8-week loan period versus, okay, so of the wages that they earned when you annualize the numbers from what they earned in the 8-week loan period, that will be compared against the wages that they earned when you annualize the numbers from the most recent prior calendar quarter. So that's what this tab is doing here, is basically we take for each of our employees, column B, we take the total quarterly, the annualized quarterly wages for Q1 of 2020, and we plug them in here for everyone. And then in column C, we take the annualized amount that they actually earned, and the annualized amount that they actually earned to annualize the amount that they earn over 8 weeks. Basically, what you do is you take the total amount earned over 8 weeks divided by 8 times 52, and then you have your total amount annualized from Q1. You have your total amount annualized over the duration of the 8-week loan period. The spreadsheet automatically captures the difference. If there is a difference, it automatically sets column E to yes, which then highlights or makes available the rest of the columns in the row, where we then record, okay, well, how much was actually earned by the person during the 8 weeks, and how much of this is beyond a 25% reduction, which is the $230.77. So there's, $230.70 of the earnings that this person made that is that represents greater than a 25% reduction in wages, and therefore that amount is not forgivable. So again, I know it's complicated, guys, but I'm just going to walk you through this one more time, because it's complicated in that it's just another technical detail on top of a whole array of other technical details. But at the end of the day, I think that it can be clearly understood simply by just knowing that. Take your wages earned in Q1 2020 times 4. You plug that into column B. Take your wages that are earned over the 8-week loan period, or the wages that we're anticipating having everybody earn over the 8-week loan period, divide by 8 times 52, and plug that number in column C. The system will automatically do the rest, except for column F, where you need to enter in the actual wages that they received during the 8-week loan period, not the annualized equivalent of those wages, but the actual wages. So if you just understand that, column B is Q1 times 4, column C is what's earned in the 8-week loan period divided by 8 times 52, and then plugging in column F the amount that was actually earned during the 8-week loan period. And then the rest of this will flow through back to your calculation of forgiveness tab to show you how much of your loan you might be at risk of sacrificing due to the wage reduction problem. And now it's really important for everybody to be doing this now, because if you actually are looking at a wage reduction problem, now keep in mind, as I said before, even after your loan period is over, you have until 6/30 to restore their wages. And again, I still don't know what they're going to demand for proof that you've restored their wages. However, you have to keep in mind that while it might be true that you have until 6/30 to restore their wages, to have whatever was spent within your 56-day loan period forgiven, if you don't make the decision now to increase somebody's earnings during your 56 days because you were otherwise looking at a wage reduction problem, then you won't be able to use forgivable money to give them additional compensation to overcome your wage reduction problem. So now is the time for you to start planning around this. Now is the time for you to start doing the best that you can do to make sure that you're going to spend that money to alleviate your wage reduction issue. And while you're at it, I would highly suggest that if you're now in a position where there's a compelling reason for you to increase somebody's compensation beyond what they're earning based on the productivity that they're performing for you, don't just lump it into their regular earnings code. Don't just call it salary or hourly or whatever you normally would call it. You should call it something special. You should call it a bonus or perhaps a COVID bonus or something like that, just to make it clearly differentiated so that it can at least be appreciated by the individual that this is compensation that they're receiving from you as the employer, and that you're doing this as a benefit to the employee because we're in pandemic time, because you value their loyalty. Just do whatever you can to make sure you're getting as much bang for your buck off of the additional compensation that you're providing. But with this spreadsheet and with the tools that we're now putting into Kronos for everyone, you should be in a position where you can make executive decisions, this week, next week, the week after, to maximize this loan forgiveness, to put you in a position where you can, decide to do some pay increases or give people raises or fund retirement accounts, et cetera, so that you have as little amount of that money left over after your 56 days as possible. So back to the calculation of forgiveness. Again, the reduction in wages, as I showed you, it's complicated, but at the same time, it's not rocket science. Now, I do want to speak to some what ifs or known problems that this presents. So, known problem number one is that one assumes, there's no language around this in any of the legislation, but one assumes that your wage reduction concept is only going to be determined based on employees who are still currently W-2 employees of your company as of June 30th. Because anybody who is not a W-2 employee of your company as of June 30th, technically speaking, has had a 100% wage reduction. So one certainly hopes that isn't how they're going to force us to look at the wage reduction piece. I can only imagine that if they're not on staff as of 6/30, then they're just disregarded from the wage reduction concept. But I don't know that for a fact. I'm still looking into it and waiting for guidance. The other thing that that these concepts that I've gone over in the forgiveness spreadsheet and whatnot bring into play, both from the FTE count situation and the wage reduction situation, are situations where you've had a natural change in the job responsibilities of existing staff members, where perhaps you've had somebody who used to be an executive level person who's now taken a lower level role and knocked $30,000 a year off their salary. And they've done that because they agreed to take on a role that had lesser responsibilities. So they agreed to take on a role that had lesser pay. It has nothing to do with you penalizing the employee or you conducting layoffs or anything like that. Even though you have PPP loan money, it's just the natural order of business. There is nothing written into the CARES Act or the PPP loan program that gives you any consideration for changes to the nature of the work that is being done by your employees as a function of whether or not that can justify a greater than 25% reduction in their pay. Likewise, customers that have employees who receive a significant amount of their pay via commissions, there is right now, for instance, some of our customers are auto dealerships. And even if the auto dealership itself is open, who's buying cars right now? So during the whole duration of the 8-week loan period, auto dealerships have all of these employees who historically have made commissions. The significant amount of their money comes from commissions. Now these people are not earning commissions because there's no sales coming in. And there's no rules or conditions written into the CARES Act or the PPP loan forgiveness that will alleviate the problem that an employer like a car dealership is going to experience in sacrificing forgiveness, at least that I'm aware of yet. Which then means that there's a compelling reason for a car dealership or anybody who this kind of situation applies to see if you can't figure out how to take as much of that remaining PPP loan money that's not going to get spent and give it to your commissioned salespeople in one way or another to maximize your loan forgiveness. And again, that's another reason why I would highly suggest that you don't just lump these things into whatever it is the employee is used to seeing for an earnings code. If you're actually going to go above and beyond and give your commissioned salespeople a significant bonus in order to alleviate the affordability or rather the wage reduction problem. Again, let's get the most bang for our buck out of that. Let's call it a bonus. Let's call it a COVID stipend or something like that, so that they can, those that look at their pay statements can at least appreciate the fact that, it's a benefit that they received from the company, rather than just, looking at it as their regular per pay period earnings amount. So as I said before, once you use the spreadsheet, you use the spreadsheet to determine your head count, your FTE counts. You use the spreadsheet to determine your wage reduction situation, doing employee by employee numbers on the annualized Q1 earnings versus the annualized 8-week PPP loan period earnings. The 25 loan expense, this 25% of loan expenses portion. Again, this is just a listing of all of the things that I called 25% expenses, which simply is a label indicating that they can't exceed that amount of loan. So you plug in your estimated utility and other payments into this tab, and it will flow back into the calculation of forgiveness tab, and then. Again, like I said, the reduction in wages worksheet, employee by employee. And then at the bottom, this is where you indicate, this automatically populates based on the reduced wages documented up in the table above, and then it will document yes. Over here you'll column H, you'll indicate yes if we restore their wages by 6/30, which will populate over here the count of employees with restored wages, which will then come back into your calculation of forgiveness tab to complete the circle. So that's the gist of the payroll forgiveness spreadsheet. I know that I've been going on and on with some really complicated stuff here. The next piece of what I want to cover, and then we'll open it up for Q&A in a few minutes, is the tools that are now being placed out into all of our customers' accounts. Okay, so so basically, for everyone who signed up for the PPP Loan Support Service, you have in your accounts now some reports like what I'm about to show you. So. Okay, so the two in question here are the PPP FTE count report 11 to 229.20, and then the PPP FTE count 215.19 to 630.19. They do exactly what you'd think they do based on the label of the report. So these are already placed in everyone's accounts if you've signed up for the PPP Loan Support Service. Basically what this does is it adds up all of the employees' actual worked hours over the duration of the period of time. It compares those actual worked hours to the full number of hours that are required over that same duration to equal 1 FTE. And then what it does is for salaried folks, it sets if the amount of hours, regardless of what the actual worked hours was, it sets the hours for the span for the salaried people to be the total number that's required for 1 FTE. It then maxes out the hourly people. So if their total hours exceeds the amount of hours necessary to equal 1 FTE, it sets that value to the number of hours required to equal 1 FTE. And if it's less than that, then it sets it to whatever that number is. Ultimately, what it does is it calculates the fraction of an FTE every employee represents, and then sums up the totals so that you can use each of those two reports to go plug your numbers here into the spreadsheet, 21 and 18, 15 and 17, whatever your two reports happen to show you. So that's basically what this report is designed to do inherently, and everyone already has these if you signed up for the PPP Loan Support Service. I do need to go through and just get my eyes on probably 10 or 12 of them out there to make sure that there weren't any column errors or anything that happened when I pushed them out. But they are there now, and they are company level reports for those of you that is relevant for. The next report that has taken me a little bit longer than anticipated, but should be there this afternoon, is a cost of forgivable cost of payroll report, which is basically in this case taking up a summation of the per payroll costs. What this report is doing is it's based on whether you have a weekly or a biweekly pay frequency. It's determining what the per payroll gross max amount that can be paid with PPP loan money is. And so if you have anybody that's receiving more than an annualized amount of $100,000, it's capping the forgivable payroll cost amount at the per payroll amount, whether you're weekly or biweekly, that amounts to $100,000 a year. So the forgivable payroll cost report is showing the total gross capped out at the per pay period maximum amount of $100,000 annualized. And then it also shows the it shows from that gross, we then subtract out any FFCRA related wages, so EPSL employee, EPSL family, or EFMLA have to come out of the PPP gross. Then we add in the employer cost for 401k. Now, in the forgivable cost of payroll report, we do not add in the employer cost for health insurance, because the PPP program only cares about when payment is made. So for the vast majority of our customers, the employer contribution to the 401k is put in. That cost is incurred basically with the processing of the payroll. But for almost all of our customers, that never happens with health insurance. Health insurance is a separate bill that you pay directly to the carrier, and technically speaking, there's nothing directly connecting that into payroll. So we're not subtracting or adding into your forgivable PPP loan cost or forgivable payroll cost report. We are not incorporating the employer cost of health insurance there because you are not incurring, you are not paying that bill then. So the PPP forgiveness report, the payroll cost forgiveness report, shows you everything that you need in order to understand how much of the money from the PPP loan account to use to fund the current payroll, but it does not include the numbers associated with health insurance. Again, because that is going to be money that you'll need to have. You'll need to move out of your PPP loan account into your operating account when you cut the bill to pay your insurance premium. So I hope this all makes sense. I know this is all new on top of 1,000 other new things that everybody's dealing with here. I will have an email off to everybody who the payroll forgiveness reports are put in place for. As soon as those are out there, a couple of other things on the forgivable payroll cost report. So it shows you the gross capped out at the $100,000 a year annualized amount. It shows you the FFCRA wages and subtracts those out of the gross for the forgivable PPP payroll cost amount. It then, like I said, it adds in the employer cost on retirement, and then it also adds in the employer SUTA cost. And then the opposite of that report. Oh, I'm sorry. There's one other item that it subtracts out of the gross, which is the total of all reimbursements that are paid to anyone gets subtracted out of the gross as well. So that's your PPP forgivable cost report. And the opposite of that report, which is the PPP not forgivable cost report, simply shows you the summation of all of your FFCRA wages, EPSL employee, EPSL family, EFMLA. It shows you the summation of all of your reimbursements as well, and then the amount of the earning that represents an annualized pay over $100,000. All of those details are summed up on the non-forgivable payroll cost report, so that you can make your money movements from your PPP loan account as streamlined and accurate as possible, so that you can get your forgiveness, prove your forgiveness to the bank as cleanly as possible. So with all that said, I know I covered a lot. I'm sure there's a ton of questions. I'm sure that your heads are spinning. I'm going to open up the session now for Q&A here. I'm going to be doing this. I need you to post the questions within the GoToMeeting, if you could, and then and I will answer your questions as they come in. And then, as I said before, if anybody needs any one-on-one attention, once you get your hands on the spreadsheet, I'm more than happy to make the time to do that at some point next week. So let's see what we have for questions. Okay, so the first question we have is, Q1 wages was impacted by the shutdown. Are we still able to use this number? There are 1 to 2 weeks of reduced hours during that time. Yes, good question. So the language around the Q1 concept, it actually refers to the most recent full calendar quarter. I believe it says the most recent calendar quarter when the employee performed work. For all intents and purposes, for my analysis, I used Q1 of 2020. it remains to be seen exactly what the banks are going to require. So I do think that it's fairly reasonable, to say, Q1 2020 will be your time frame here, even though there's 1 or 2 weeks of reduced hours within that time frame. But at the same time, right now, there's no definitive guidance on this. I can't promise you, what exactly your bank is going to require, which is in part why we asked you guys when you submitted the PPP Loan Support Service form, we asked you to identify the lender, because we're going to be doing our best to understand what each of the lenders is demanding, so that we can make sure that we're going out of our way to put you in a position to have what you need for that lender. Depending on the unique thing that they ask for that the other banks might not be asking for. But I do believe, Deborah, that that Q1, if the only reason why you would think that Q1 might be questionable is because of the 1 to 2 weeks of reduced hours, I do not think that that's a problem. I would right now I have not seen any information that would indicate that would not be your span of time based on your question. So next question, is there any limit to the amount of bonus per employee less than 100,000? No, there is no limit to the amount of bonus per employee up to the 100,000, period, across the board, end of story. Meaning there is no rules anywhere at all in any of this that penalize you or create a problem for you by increasing somebody's pay unless you exceed 100,000 annualized. So, good question. I just submitted the form. When can I expect to see these reports in our account? So on a daily basis now, what we're doing is when the new forms are coming out, we are putting the reports that are ready out there on a daily basis. So Tina, you can expect that you'll have your FTE count reports later this afternoon, and you'll get the forgivable payroll cost reports very shortly after that. It might be possibly first thing Monday before you actually see the forgivable payroll cost reports. But everybody who has submitted the form by end of day today, you will definitely, without question, have your forgivable payroll cost reports no later than Monday morning, but most of you will have them later this afternoon. Okay, so next question. Does the money spent need to be cleared from the account or the check just written? Good question. It needs to be spent. Basically, this is all being done on a cash basis, which means it needs to be spent. There is no accrued liability that we're talking about here. If you have any of that money in your bank account, still after the 56th day, it is not forgivable. You can't, you can't go to the bank and give them a manifest of all of the issued checks that had been outstanding as of the 56th day of the disbursement period, and expect that the bank is going to say, oh, okay, yep, you issued payment, so you're good. If the money has not been spent by the 56th day, it cannot be forgiven, period, end of story, across the board. At least that's how it's working so far. So I think, oh, no, we got a couple more, hold on. Okay. For the FTE and wage test periods, does that mean actual pay dates or actual hours worked? Good question. So here's, it follows the spirit of the last question. The PPP loan program only cares about when payment is made. It does not care about when liability was accrued or what span of time the payment was made for. So at the end of the day, this is also why, I've advised customers that it's not really a big deal. The first pay date that you have in your PPP loan period isn't a big deal because 100% of the funding, aside from the non-forgivable payroll costs, for that pay date can be used with PPP loan money, even though the pay period likely has dates in it that happen to be for disbursement. All the PPP loan program cares is about what you spend after the loan is dispersed. But this also creates complications on the reverse side, okay? And this is part of the reason for the cost of the PPP loan support service, is because this is all based on a cash basis and not accrued liabilities. While it doesn't have a negative impact on the first pay period of your loan period or first pay date of your loan period, it will create a problem for the last pay date of your loan period. Basically, what it means is that we are going to need to create a special payroll for every customer that has a PPP loan. That payroll is going to have a pay period end date that is 56 days after your disbursement, and pay date that is 56 days after your disbursement. And in that pay date, every employee will be paid current so that they receive all wages due to them on that day. And then in the next scheduled pay date, everybody will get the difference between what they normally would have earned and what they earned in that special pay date that was on the 56th day of your loan period. And by having two separate payrolls like that, you will have your transactions come out of that PPP loan account on the last day of disbursement, and therefore it will be forgivable money. But if we don't make it work like that, then you will sacrifice forgivable PPP loan money because you will not have maximized the amount of current pay due to your employees that was issued to them as of the 56th day after disbursement. So again, it's all about the date that you pay. And it doesn't matter about the accrued liability or when, what time frame that represents. And actually, okay, so I answered that question, Kristen, in reference to the spending of your PPP loan money. So your question was actually in reference to for the purposes of the FTE and the wage test periods. And for the purposes of the FTE and wage test periods, I will also say what I said just a minute ago, that it is all based on the pay dates associated with. That seems like the only reasonable thing that would make sense here. That it would be the pay dates and not the pay periods. The reason why I say that is because, again, wages, the concept of the wage test period not being related to pay date, is. I mean, not to say that I expect logic in this stuff, but is completely illogical. And the FTE count piece, because everything else is based on pay date that we're talking about here, and because it's just not reasonable for us to run a calculation of, and because the spans of time that they gave us are so arbitrary. It's only reasonable for us to use the hours that people were paid for during those spans of time for our calculations. And given that we have no guidance to work with, it's a reasonable a reasonable business practice decision for us to make there. It doesn't seem to make sense to me that we would make that decision based on anything other than that. So in regard to wages, has there been specific guidance in regard to bonuses versus wages? Yes. So the specific guidance is that nobody cares what you call a thing. Compensation is compensation, and as long as we're not paying people over an annualized amount beyond $100,000, then you can call it whatever you want. You can pay people as much as you want, and it will all be forgivable PPP loan money. You can increase somebody's pay 3,000%. And as long as you're not exceeding the annualized amount over 100,000, 100% of that will be forgiven if everything else falls in place. So it doesn't matter if it's a bonus, doesn't matter if it's hourly pay, doesn't matter if it's overtime, doesn't matter if it's commission, doesn't matter. What matters is you can't pay reimbursements. You can't pay FFCRA wages, but you can pay any other type of compensation, just as long as you're, not using PPP loan money to pay people cash compensation that represents greater than an annualized amount over $100,000. So what happens with an employee who quits and when asked to come back to work? Good question. And of course, as we start to talk about, things coming back to some sense of normalcy, these conversations are happening more often. And this is one where I'm still up in the air on this. I'm conceivably, there's two answers I can give to that. So the employee who quits, that is going to cause an FTE count problem. Okay, just pure and simple. The extent to the FTE count problem will be a function of how many hours that they actually did work over your 8-week span, how many FTEs they amounted to over that 8-week span, versus how much of an FTE they amounted to in whichever of the look-back periods you're using to determine your FTE threshold. So you do have the possibility where you could sacrifice some forgiveness by having a reduction, in your fractional FTE count that you do not restore back up to the old level by 6/30. But the employee who quits when asked to come back to work, as I mentioned earlier, I still don't know this for a fact, but I'm assuming that for the purposes of the wage reduction question, that we simply omit all employees who are not active as of the last day of your 56-day loan period. I do believe that all active employees on the 56th day of your loan period will need to be reported on to demonstrate that you didn't reduce their wages below the 25% amount. But again, if they're not on staff as of the last day of your disbursement period, I can't imagine that you're going to have to report on them. I can't imagine that they're going to penalize you for 100% of their wages. But I can't say that there's a heck of a lot of logic that's been applied here each step along the way. So it does, in some aspects, remain to be seen how they will come down on this one. I have a very, very hard time believing that the employee not being on staff is actually going to sacrifice any forgiveness on the wage reduction piece. It will sacrifice forgiveness on the FTE count, though, definitely, unless you hire someone back by 6/30. If I have one employee who makes $125,000 per year, $125,000 per year, and that is a gross biweekly amount of $48.07, I can only use $100,000 per year divided by 26, which is $38.46 when I draw on my PP loan for each biweekly payroll. Yeah, so yep, that is one way to do that. Another way to do that is so 125 per year would be, and it all depends on the particulars of your scenario. And again, this is one where it's gray area. 125 per year is basically a monthly salary of $10,416.67. Okay, and arguably the PPP loan program is designed to go for 2 months. So So this employee, basically, we can't allow the employee to earn. Actually, I did this math wrong because I used 100,000, 125,000. So 100,000 divided by 12 times 2. So monthly salary amount. The annual equivalent for a monthly salaried person that represents over $100,000 of gross pay over the 8-week span is $16,666.67. You could do it the way that you did it, or you could do it this way. And any amount that they earn over $16,666.67 over the 8-week span cannot be forgiven. This is one of the places where it's a little bit gray area. Yes, you could calculate the salary amount down to the per pay period amount, but I also think it's totally reasonable to calculate the salary amount to a monthly amount, especially if your employment agreements are based on a monthly amount of pay, even though your pay periods might not be. So technically speaking, by using this method that I used, it gives you more wiggle room because the weekly equivalent that would exceed 100,000 is $2,083.83 or something, or rather all I'm getting at is whether if you do your math your way or if you do the math that I did the way I just explained it, both should work fine. One of them you will see is more advantageous to the employee and to the employer, in that one will allow your amount that you pay over the 8 weeks to be higher than the other. And I don't think it's an unreasonable approach, because oftentimes, salaried folks are paid on a monthly basis, and a per pay period calculated amount is not more accurate. It's just done that way because you process payroll weekly or biweekly, but their salary is still monthly. So, again, it's gray area. The rule is the $100,000 annual limit. I think $16,666.67 works just fine. I also think that $3,846, across 26 pay periods also works just fine. What you'll see in the PPP forgiveness report is the way I've designed it so that the system is going to show you if you have a weekly payroll, it's going to show you for a forgivable PPP Paycheck Protection Program forgivable payroll cost. It will show you if you're a weekly payroll, the PPP gross amount will be the weekly max that would apply, which is $2,083.83. For a biweekly, it will show you the biweekly max that would apply automatically. And once you look at that, if you want it to calculate a different amount, or if you question why it's calculating what it is, again, that's going to be something that I'll be happy to jump in with you on, answer those questions, tweak the formula to make it show you what you really need to see there. But by default, it's going to be designed to show you a capped PPP forgivable cost that is represented by the annualized equivalent of the weekly salary amount that you're paying if you're a weekly payroll, or the annualized equivalent of the biweekly salary amount that you're paying if you're a biweekly payroll. And that is the last of our questions that have been posted so far. So I hope that your heads aren't spinning too badly. I know there's a lot of details here, guys. There will be these payroll reports out there later this afternoon, and at the latest by Monday morning for some folks. If anybody has not yet submitted the PPP loan support service form, please do that, and we will quickly get the reports placed into your account. We got one more question here. We have a separate checking account for the loan funds, but since the entire payroll is not included in the PPP, would you suggest paying the payroll out of the normal bank account? Yes, and this is exactly why we decided to put the forgivable PPP cost report and the non-forgivable PPP cost report in everybody's accounts, is specifically for the reason you just laid out. My suggestion, because right now we don't know what the banks are going to demand for proof that all of the money that you spent was spent on legitimate PPP costs. And because of that uncertainty, it seems to me that the most reasonable thing for us to do is to make it so that it's virtually impossible for anything to happen where any transaction that came out of that bank account was not forgivable. So I think that the best practice would be every transaction that comes out of that bank account needs to be pushed by someone on your side. Meaning we do not have automated debits against this account. We do not have automated monies pulled from payroll out of this account. We do not have, the health insurance carrier ACH the money from you. You forward the money to your operating account to fund your payroll. And the money that you move out of the PPP loan account will be the lump sum total of all forgivable PPP costs. So you move that transaction from your PPP loan account to your operating account or your payroll account based on the reporting that we provide as we finalize your payrolls. And then when you go to pay your insurance premium, you then move money out of your PPP loan account into your operating account, and then you cut a check off the operating account to pay the health vendor for your health insurance. When you go to do your employer contributions to the retirement plan, you fund from the PPP loan account, move that money into your operating account, and then have the custodian of the retirement plan debiting your operating account to pull the funds based on the retirement contributions that were reported. If you do it this way, then you'll create a situation where it's virtually impossible that any transaction generated off your PPP loan account will have been for any purpose other than forgivable PPP loan costs. And that seems like somewhat of a bulletproof way to be able to then tell your bank, hey, here's the payroll reports out of our payroll system, and you already have all of our information from the bank account. As you can see, these are all lined up dollar for dollar with the payroll reports from our payroll system, and there's all the proof that you need that every cent of this money was spent on legitimate payroll costs. I think that's probably the best path forward right now until we start to get guidance from the banks on exactly what it is that they are going to demand for proof. So if the employee pays a portion of health insurance, I can only use PPP loan money for my employer portion, correct? No, not exactly. The right way to think about this is that you need to think about two different concepts here. You need to think about the employer contribution to health insurance as being something that you can account for as a forgivable cost, separate from payroll costs, because that is actually payment that you as the employer are issuing to the carrier with your own money, and therefore the date of the transaction, the date of the payment to the vendor is what matters. The employee's contribution to health insurance is part of your gross payroll cost that you can use PPP money for, but you don't need to think about the health insurance part of that, okay? Because the way the PPP loan program works is that you use your PPP money to pay your payroll costs, which includes gross pay, which includes the deduction that's withheld from the employee's pay for their health insurance contributions. And that is part of your payroll cost for that payroll, which would then get funded by you by transferring money from the PPP loan account into your operating account based on the reporting that we provided. But the employer cost for the health insurance premium would not get documented as a PPP cost as part of that payroll. It would get documented as a PPP cost separately when you go to pay that premium amount, whether you pay it, you move money into your operating account and go pay online on the carrier's website, or you move money into the operating account and cut a check. I highly, highly, highly suggest that especially at the end of the loan period, that you start doing electronic payments whenever possible. Because again, right now I have not seen any language around this that says as long as the check date is, before the 56 days are up, it doesn't matter when that check is cashed, even if it's 3 months later, it'll still be forgivable. I think that it's going to be complicated if we have outstanding checks floating around that haven't been cashed when it comes time to proving that you spent the money in the time that you needed to spend it. So with all that said, again, the employee's contribution to health insurance is part of your gross pay already, which you're already spending your PPP loan money on. The employer portion, you are getting PPP loan money to spend for the employer portion as well. It's just that we're going to account for the employer cost, not as part of payroll, but as a standalone cost when you issue that payment to the carrier. So if you move money to the operating account, does that count as spent as opposed to the check from the operating account posted? I think so, Deborah, it's a good question, but I think you're getting, I think that you're getting a little technical here. At the end of the day, the spirit of this, to the best of my knowledge, should be that the money has to be spent. Okay, and yeah, technically speaking, if you move the money from your loan account to a payroll account or an operating account, it will appear that the money moved from the PPP loan account, possibly before it was actually spent. But if you are trying to make absolutely certain, again, we're operating in a world of uncertainty here, which means that we need to, whenever possible, make decisions that are going to create some certainty for us to the best of our knowledge. And we need to avoid making decisions that have these open-ended, things about them that might come back and bite us in the butt. And so my suggestion here is that hold on one second, sorry, my computer just froze. My suggestion here is that you look at this from the perspective of the money can no longer be in your possession. It doesn't matter if it's in your PPP loan account. It doesn't matter if it's in your operating account. It cannot be in your possession. If you want it to be forgiven, it cannot be in your possession. If you have any dollars and pennies that are still in that bank account or in your operating account or any other bank account that you own after 56 days post disbursement, then you run a very real risk that money will not be forgiven. I don't know how they'll force you to prove or what they'll demand of you that will put them in a position where they've determined that can't be forgiven. But the possibility certainly exists if the payment actually hasn't been drawn from your bank account by forwarding it to whomever it is that needs that money for that payment to have been satisfied. Okay, so then we have our loan was funded on Monday. The payment for our May health premium has already been paid. Can I transfer money from the loan account to cover this expense? It really depends on the disbursement date of the loan money and when you paid the bill. If the two things more or less coincided, disbursement happens, on the same day that you paid the bill, or perhaps even a day before you paid the bill, but you didn't directly pay that bill with money that came out of the PPP loan account, you could still have used money in your possession to pay that premium, and through some movement between bank accounts, make it so that that May health premium was paid for with PPP money. But you could really only do that if the disbursement happened on the day that the money came out of your bank account that was not paid through the disbursement. So if the dates overlap, you can do it. If the dates don't overlap, then you should not do that. Hopefully it will put you in a position where, you can get your June and potentially July premiums paid with your loan money, since it looks like May probably won't be available for you. So with all that said, guys, I am going to hang out. If folks have more questions here, please plug them into the Q&A or the questions area. as I said before, there's going to be 4 reports. There's 2 already out there for almost everyone, which are the FTE count reports. There's going to be 2 more later this afternoon or by Monday morning at the very latest that will show you your forgivable PPP cost and your non-forgivable PPP cost. As you guys look at those reports and start to use them, if there's any problems that you have with those, please email covid19@checkmatepayroll.com. We will have a group of people here monitoring that inbox next week and into the future to make sure that you guys are responded to quickly. At the end of the day, nobody should need to stress out about how much money you need to move from which bank accounts with next week's payrolls or those into the foreseeable future. You can rest assured that we will be here to help you. And with all that said, I want to give everybody back the rest of your day and hope everybody has a wonderful weekend. Like I said, we are here to help. There will be a recording of this webinar that's made available to everybody. You will get a copy of the spreadsheet this afternoon as well. I tried to put it up in the handout section, but there is a handout out here, which is a PowerPoint, a PDF of the PowerPoint for the presentation. So if you wanted to download that, you can go ahead and do that. The PDF will also be included in the email that goes out to everybody who attended this webinar. And last things last, we do have a number of things that we've been obtaining for customers as everybody gets ready to open back up. We have coronavirus awareness and prevention posters to put out in your workspace to get everybody to understand how to engage in the workspace in a way that will minimize the spread of COVID. Everybody who's on this webinar is going to get a free set of those shipped to you, those will be coming to you next week. And then there'll be a little insert in the poster tube that gives you a link to a URL where you can buy more if you need them. Very soon there will also be PPE available from the same website, which is Checkmate's OSHA storefront. So something to keep your eyes open for as we go into the future. If you guys are in need of thermal, thermometers, infrared thermometers, disposable thermometers, face masks, stuff like that. So that all said, I appreciate everybody's time this morning. It looks like there might be, yeah, cool, okay. So where are the reports found? So I'm placing the reports are under My Saved Reports in everyone's accounts. You're going to have to enable the View Other Settings or Show Other Settings option, and you'll see that these are company reports. They are reports, the FTE count reports are based off of the pay statement history summary report. So they're all payroll-based reports, and you can get them by going to My Saved Reports and clicking on View Other Settings. And again, there's 2 of them that are there right now. There is the FTE count report for the 2/15 to 6/30/19 pay period, and then the report for the 1/1/20 to 2/29/20 period. And then you're going to be able to get the payroll, the PPP Loan Forgiveness report and the PPP Non-Forgivable report. Those will also be accessible under My Saved Reports in a similar manner as the FTE count reports. We are going to over-communicate about this, guys, so I'll apologize in advance, but you're probably going to get 2 or 3 emails in the first 2 or 3 days next week that are going to be in reference to where these reports live, so that we know that everybody has at least gotten that communication from us. We're not just going to say it's in My Saved Reports. We're going to take a screenshot and throw that into an email for everybody. So, but that is where they live. You should be able to find those first 2 reports out there now. If anybody has any trouble finding these reports, again, just reach out to us, and someone on my team will jump on it and make sure that whatever is preventing you from seeing it gets fixed ASAP. So So with all that said, guys, I am going to sign off now. I hope everybody has a wonderful weekend. And we very much do look forward to helping you guys get these loans forgiven. It's going to be a huge thing for everybody, for this to come out of this and have this, turned into a grant. I know, we all know here how important this is for you. So you can rest assured that we are here to help. I hope everyone has a wonderful weekend. Stay healthy. If it's weather permitting, get outside and get some fresh air. And you can expect some further communications from us later today into next week. And hope everybody has a good weekend. Thanks very much. Take care.